Hello, everybody. Welcome. My name is Kurt Klaus, and this is the monthly Agent Advantage webinar. This series is brought to you by the Guaranteed Rate family of companies. I'd like to thank you for joining today's webinar titled How to Help First-Time Home Buyers, and saw a stat from NAR that first-time home buyers now account for almost 1/3 of all buyers, and that was last year, 2023, 32%. It was up from about 25%, 2022. So huge group here, surprising number. Also, the median age first-time home buyer went down year and a half. It's down to 35 years old. So today, we want to help you talk to that group and make the process super easy, help them. We know the process can be intimidating for anyone, yet a first-time home buyer. How much can they afford? The pre-approval process, just to help you with some additional things to inform and educate them and give them, honesty, comfortable payment they can afford, help them avoid mistakes. So we'll bring on our expert, Dave Lopshire, who will cover everything that you can do to help them find that perfect loan with what can be that tough first-time buying experience, make it stress-free, make it positive. Tips and a game plan from application all the way through to closing, so you can execute the perfect transaction. Those clients with a positive, great experience will be your clients for life, and they can be a promoter and a referral source for you and to everyone that they know, so they can direct you for more business. So please, these are live. Thanks for being here again. These are, again, brought to you by all of our Guaranteed Rate companies: Guaranteed Rate, Guaranteed Rate Affinity, of course, Proper Rate, Certainty, Citywide, all of our realtor referral partners across the country. And these are all brought to you by the Agent Advantage website. So if you're unfamiliar with Agent Advantage, that is our no cost, no obligation site, all of our tools and marketing for all companies. There's a branded version for each. Agents.gra.com, grarate.com, agents.rate.com. There's one for every company. So that site contains all of our tools for you, the real estate agent. It's got a no-cost marketing CRM. It's got a loan dashboard where you can see all the deals you have in progress with us. It has a coaching piece with monthly webinars like this one, social media tips. So tons in there. It's all for you, the real estate agent, and it's at no cost. So check it out. Speak with your loan officer for more information about Agent Advantage. We also have an Agent Advantage Facebook page, Agent Advantage Insider. Search that on Facebook or click that QR code on the slide there, and you can request to join the Agent Advantage Insider Facebook page, which will have everything that we're doing at Agent Advantage, upcoming webinars, news, kind of a site for agents to, share information on. So check out Agent Advantage Insider. And again, before we get started, I will remind you to please ask your questions in the chat, in the go-to there. We'd love to hear from you. We'll save a little time at the end of this webinar to reply to a question or two. So again, thanks for being here. Plan on 30, 45 minutes. And now I would like to introduce our Senior Vice President of Sales, Dave Lopshire, who will be giving the presentation. Dave, how you doing? Thanks for joining and helping us out today.
Hey, thanks. I didn't know we were going to color coordinate today. That's fun.
Yeah, got the uniforms on. Yeah, well done.
Yes, exactly.
Yeah, but thanks for talking to our agent audience, and yeah, love to have you on. And again, I had no idea it was such a huge percentage of buyers today. So great talk.
Yeah. So hey, good to be back with you, and thanks for the opportunity to talk about some of the ways that we can continue to build our business together. And you hit it right on the head earlier, right? What we're trying to do is we're trying to develop deepened relationships with clients, right? That's when they last forever. And so we want to make sure that we do that. Now, before we get started, I just want to also reiterate what Kurt said. Please feel free to ask any questions. You can do so using the GoToWebinar panel on your screen. If you don't see that chat box at the bottom, click on that orange arrow on the box, and that will open up the panel, and then you can see that that chat box down there. Now, back to Kurt's stats. So far in 2024, first-time homebuyers have made up 38% of all home buyers. So as you can see from the 2023 stats to here we are in June, right? It's actually growing even more. First-time home buyer, again, 35 years of age. That's dropping. So what's happening is we're getting more first-time home buyers and we're getting younger buyers. And I will tell you that what we also are seeing is that we're seeing some people doing multi-generational purchases, right? Because of aging parents, kids are coming back home to take care of mom and dad. And as we all know, a lot of people in the age group of 18 to 25 still living at home, right? Mom and dad want to get them out there. So we have a lot of opportunity. One of the other things that we're seeing, 2% of our, 16% of our first-time homebuyer purchases recently were veterans, and 2% of those were actually active duty veterans, right? So there's some opportunity out there with our veterans for sure, and we'll talk a little bit more about that. Now, let's talk about first-time homebuyer. HUD has a definition, as you know, right? And from the federal standpoint, they say it's an individual who has not owned a principal residence for the last 3 years, right? So if you take the date of the purchase and go back 3 years, if they haven't owned a property, they're technically a first-time homebuyer. And if they're a couple, if one spouse has not owned a home, both spouses are considered first-time homebuyers. And the reason I bring that up is because there are some programs specifically designed for first-time homebuyers. And so I think that's really important to note, right? That if you have somebody that may have owned a home 4 or 5 years ago, we can actually consider them a first-time homebuyer. Now, I want to also make sure that we understand that, you know, we have to treat people differently who are going through the home buying process for the first time ever. So let's get into this, all right? So as soon as I identify a client who's a first timer, I immediately just slow way down, right? First and foremost, when it comes to all things real estate, you're the expert, right? I'm an expert when it comes to all things mortgage lending. But remember, we do this every day, right? We do it every single day, day in and day out. When we're dealing with someone who's new to the process, they don't know anything, right? We have to think back and remember every single detail. And there's going to be many points that you normally wouldn't go through with an experienced buyer. And that is not the case with a first-time home buyer, right? You have to really make sure that you understand where they're coming from. And almost always, they're really excited, right? And they've probably done most of their research on Google, right? Or by watching YouTube videos. That's kind of scary to me because we all know that internet information is kind of hit and miss. Now, there are some really good YouTube videos out there, but you don't know the ones that they've watched, and so you don't know what they've learned by some of those sites that don't have good information. So we have to be prepared to wade through that. We got to get that information that they have in their head and be willing to walk through really what's correct and really what's not. Now, speaking of online, right? We're in the digital age now. We all know that the pandemic changed the home searching process. Buyers have a lot of misinformation simply because of how they've been shopping. So 41% of recent buyers, they tell us the first step they took in the home buying process was to look online at properties for sale. Not good, not a good place to start, right? And every buyer we've had tell us that they've used some type of online tool before buying the house that they purchased. So again, we might have to debunk some of the information that they have in their minds, which brings me back to my original point. First-time home buyers require a significant amount of your time and your brain power. They're going to be eager to go see the home that they found online. But you know as much as I do, we shouldn't be putting somebody in your car to go look at houses before we've done all of the prep work up front. Now, little side note here. I was recently talking with some first-time home buyers, and it was a really nice young couple. She's the daughter and son-in-law of one of my friends, and they had recently closed on their first condo here in Chicago. And to be honest, it was really rough for them, right? They both felt like their agent and their loan officer really didn't go deep enough with them. And she said something that really stuck with me. She said, look, they should have treated us like we're school kids, and they should have taught us how to buy a home. I love that concept, right? I love that. We have to basically teach people how to buy a house, right, for the first time. And the reason I tell you that is that we have to go deep, and we have to cover every base. And then we actually have to go deeper. We have to be prepared to answer every question, get them on the right track, and then give them your best method of communication, whether that's text, whether that's picking up the phone and calling you, whether that you want to email them, whatever, right? You tell them, we covered a lot, right? But you're going to have more questions. And when you think of something or have a question, call me, text me, let me guide you, right? We don't want them going back to the internet, getting more bad information. And as I mentioned earlier, don't show them a house until you know that they're mentally and financially ready to buy, right? Your lending partner is going to be instrumental in the process, especially with a first-time home buyer. You as the agent, you're going to walk them through the process of finding and buying their dream home. Me as your lending partner, I'm going to facilitate that buy, right? And the only way that's going to happen is by me making sure that they're going to get approved for a mortgage. So over the next course of these slides, I'm going to talk about that process. Now, my pre-approval of a first-time home buyer probably takes me 3 or 4 more times as long with an experienced buyer, because I too am going to slow way down. I'm going to look at every angle for them, right? Now, what's usually the biggest hurdle for a first-time home buyer? Money, cash to close, right? How much money do they have to put down? And how much do they have left over for closing costs and reserves? So that's where I start, right? Starting the whole process on the right foot, and it's going to go way better from there. Now, as we've discussed, younger buyers like to use online tools to go through the process. We got to make sure they're using the right tools. That young couple I mentioned, one of the problems they ran into is that they used a basic mortgage calculator that they found online to see what their down payment and monthly payment could get them. Those mortgage calculators are good, but they really just don't go deep enough, right? This couple thought they could afford a lot more home than what reality turned out to be. So it's my job as your lending partner to set a realistic expectation of what they can afford, so you're showing them the right homes, right? And the easiest way for me to do that is get them looking at real numbers. Now, each of the guaranteed rate companies, we have what's called an intuitive loan finder. It's available to home buyers. And I think the key word here is intuitive. Actually in less than a minute, they can enter some basic information. And in the background, our tool looks at things like property types and property areas. It looks at average loan prices or home prices in that area, right? Loan limits, taxes, insurance, all of those key factors before it actually spits out a payment or price. And that background process runs in seconds, right? They don't even know what's going on. Also in that back end process, we look at the average interest rates and different loan rate types. We all know that rates are credit score driven, right? So we're giving them a basic rate. The intuitive loan finder is a lot more intuitive, which means it's a lot more accurate, but it's not the best thing we have, right? That leads us to our digital mortgage. Yeah, is the intuitive loan finder a good place to start? Absolutely it is. But what I really want to do is I want to really get them in and get them pre-approved as soon as possible. And by the way, the guaranteed rate companies created the first digital mortgage, and we continue to lead the industry with our tech, right? Now, I want to get them pre-approved. And the first step that they can do is completing the digital mortgage. It will usually take them 15 to 20 minutes, right? And what it does is it helps them make some decisions. It will help them decide which loan program would probably be best for them, how much money that they're going to absolutely have to put down to get their payments where they want them, right? Sometimes we have to change programs, but I'll talk a little bit more on that in a moment. But what happens is the digital mortgage will pull their credit, and it gives me a real look at where they are financially. Okay, let's talk credit. 3 credit bureaus. They use algorithms based on reports from banks and credit card companies, lenders, student loan providers, utilities, collection agencies. They crunch that credit history to verify the loans a buyer has and how well they pay them back, right? When I'm talking to a buyer, I ask them if they were late on anything or anything they haven't paid, right? We need to know how much debt they actually have and how many trade lines they have open. Well, the other thing that we deal with first-time home buyers, they don't have any credit. I was talking to a young man who was still in college. He's getting ready to graduate. He's talking about maybe, he already had a job lined up, talking about maybe buying a house. The problem is his parents paid for everything. They made his car payments. They paid his gas. They paid his utilities, right? In other words, he had zero credit. I can't do anything with that. So I told him, you should go get a credit card, right? Buy stuff and then pay it off every month. Pay it in full, pay it on time, right? That will help him build some credit. And I told him, see if mom and dad will put that car in your name. They can still give you the money to make the payment, but you need to make the payments, right? Get it in your name. Whatever you can do to build your payment. Now, most mortgage lenders will go down to a 580 credit score. Here at the GR Companies, we do have some programs that will go lower than that. 580 to 670 is considered fair. Workable, right? 671 to 740 is pretty good. Anything above a 740 is really good. First-time home buyers, especially younger buyers, may have some credit obstacles to overcome. So the sooner we know about their credit, the sooner we can figure out what our best approach is going to be. Now, once we get their credit pulled, our system will then ask them to upload any documentation. And here's where it gets really good. This is what I love about our tech, right? Our system is so smart, it only asks them to upload the docs we actually need, right? Our AI technology reads and extracts the information from their documentation and then uses the data, right? It digitally verifies and extracts the data, and then it actually calculates their income. It automatically identifies conditions, loan conditions, right? It looks at that data, clears some of those conditions, and then it can actually deliver a real-time approval. Some of our borrowers, even those buying for the first time, they're actually getting approved in one day, right? Now, I love our tech, and our clients tell us they love it too. But remember, tech makes our lives easier. Tech makes it easier for our clients, but it doesn't replace the fact that I need to be involved in that process, right? Not only me, but you, right? Agents need to be very involved in the process all the way through. Tech facilitates the relationship, but I'm the one that has to build it, right? With a first-time home buyer, when they go through that digital mortgage, I'm going to go back through and I'm going to check every detail, right? Because sometimes they may have made some, mistakes when they're entering information. I got to verify everything. I'm going to go back through and look at it. Our systems are incredibly intelligent, but I'm going to make sure that I walk the buyers through everything. So not only do they understand, but they can ask questions too. We've done loans for experienced buyers using our digital mortgage where we don't even talk to them until they show up for closing, so we can take our Instagram photo, right? But with a buyer doing this for the first time, I'm going to cross every T, I'm going to dot every I. I want to make sure that you have the best opportunity to put them in the right dream home. All right, details are important. There's sometimes can be little things that may derail us if we don't uncover them in the process, right? Say, for instance, a prospective buyer tells us they're going to put down $20,000, right? Well, I need to know things like, is that all the money you have, right? Do you have additional funds? Is that for the down payment only? Do you have money for closing costs, right? I've run across buyers who didn't know there was a difference. And I also need to know where that money's coming from. If they're putting $20,000 down, that's great, but where's the money coming from? Is it a gift from their parents or maybe grandma, right? That's going to make a huge difference. So I got to ask a lot of big questions. Next factor that I look at are ratios. I'm sure you're familiar with this. The front end ratio, which is their housing, the back end ratio, which is their total debt, right? I like to use the 28-36 rule. New housing expense should not be more than 28% of the buyer's gross monthly income. And obviously, if I've got a couple, that's going to be together, right? Single buyer, that's going to be by themselves. We know that housing expenses are the total, the mortgage payment, taxes, insurance, HOA fees. We know that, but do they, right? Most of them don't, so we have to explain it. Same thing with the back end or the total debt ratio. no more than 36% of their gross monthly income. Now, I've got programs that'll go a lot higher than that, right? But, we have to explain all the expenses that go into that debt. As I mentioned earlier, many new buyers have student loan debt, right? We have to help them figure that out. We've got loan programs that will take that into a combination as well. I can push the ratios in some cases, but I think 2836 is a good starting point. If ratios are too high, I may need some additional time with them to get them ready for you to sell them a house, right? So in selecting the right program, I got to get a lot of details, which comes from a detailed look at all of their data. Now, let's talk loan programs. When I think about loan programs, right, I think about affordability, number one. I think about intended outcomes, such as how long are they going to stay in the home? That's a big one, right? Now, remember, the longer the term, usually the lower the payment. You won't encounter a lot of first-time home buyers that are in a position to get a 15-year loan, but you never know. And the only way you do know is by asking them, right? Because what I really want to get to, and I think this is the big one, right? I want to get to is their payment. And by the way, if you ask a home buyer a couple of years after they close what their interest rate was, they probably can't tell you, right? But I guarantee you they'll know exactly what their payment is. So I asked the buyer, look, what do you want your payment to be? And then I asked them, what's the absolute most you could afford? And that gives me a little leeway in case we have to push that a little, right? But I also have to keep my ratios in check as well. Now, fixed rate mortgages, advantages, a lot. It stays the same for the entire life of the loan. Payments will basically stay the same for the term. The only increases will come from if the taxes go up or the insurance goes up, right? With a fixed rate mortgage, the market doesn't affect the term. Most of your first-time home buyers probably fit into this type of program. And in the fixed rate category, I've got conventional, I've got jumbo, I've got government options. So there's a lot of options when it comes to putting the buyer in the best program. But again, I need to assess what their long-term goals are with this property. If I have a buyer who needs a lower payment to start, I can look at an adjustable rate mortgage, or commonly referred to as an ARM. Now, many first-time home buyers like ARMs due to the introductory rates, which are much lower, right? They're comparatively lower than that of fixed rate mortgages. That would automatically reduce the monthly payment. It provides an affordable entry point to home ownership, and ARMs usually have an initial fixed rate period, usually 5, 7, 10 year, right? And again, features a low introductory rate. And then after the introductory rate, it's a variable loan, right? A variable interest rate that's based on the index. And again, that's measured by the cost of short-term borrowing. ARMs are a good option for those who are looking to move up in a few years. So say, for instance, they want to buy a starter home. They want to stay in there 3 to 5 years, and then they want to sell it and buy something bigger. I will warn you though, my wife and I bought our house, the one I'm currently sitting in, 31 years ago, thinking we were going to live in it for a few years and then move up. And we love the house, we love the neighborhood, we love our friends, we've never left. So we got to watch that, right? Another example, doctors who are in residency. If you're familiar with doctors in residency, they make a small salary for their first couple of years, right? And then they see a substantial income increase when they leave residency. That's a perfect borrower for an ARM, since there's a good chance their permanent position is going to, number one, their income is going to grow, but they're also, when they take their permanent job, it may be in a new location. So they'll have to sell their existing house and move to a new location, or they refi their existing home, right? We just have to kind of watch and see what happens in that particular situation when we have an ARM. And again, there are some drawbacks that we have to be aware of. Once that initial fixed rate period expires, the rate could be substantially higher. So we have to keep an eye on it and look at additional options when that time actually comes. All right. Now, depending on a buyer's financial situation, we've talked about fixed rate, we've talked about ARMs. Now let's talk loan programs. I'm going to look at every type of loan I have in my arsenal. Remember, every person is different. Sometimes people who want to buy a home together, they're completely different from each other, right? They have different situations, different financial portfolios. So I have to consider every option that works best. So we'll start with conforming loans. That's usually a Fannie or Freddie loan. I'm sure you're familiar with that. Now, those are loan amounts under the conforming loan limit. As you know, that limit goes by county, and there are many differences. There are conventional loans with down payment options. I can go as low as 3% for home buyers that meet minimum credit requirements. Fannie and Freddie also have several programs for credit-worthy lower income buyers and programs for qualified first-time home buyers, and I'll talk about those in just a minute. Now, government loans, great option for first-time home buyers. Many first-time homeowners find FHA loans as an attractive option. Number one, they're backed by the federal government, right? And they come with fewer restrictions, and they offer applicants reduced down payment options, and they will take lower credit portfolios. Now, I don't want you to sit there and go, oh no, I can't work on an FHA loan. Yes, you can. They're so much different now. If you're an experienced agent, 30 years in the business here, right? I can remember the day when FHA loans were tough. You only used them as a last resort, right? Not the case anymore. There's as streamlined as any Fannie and Freddie loan that we have, and they work pretty much the same, right? The cool thing about it is that if you have a first-time applicant, they have down payment options that start at 3.5% down if they have a minimum credit score of 580, right? Lower credit scores require more money down, but we can work with buyers who may have had some past credit struggles as well with an FHA program. Now, if either buyer is a member of the military, past or present, or a spouse of a service member, they're entitled to reduced rates, 0% down payment options, and low minimum credit scores. Now, here at the Guaranteed Rate Companies, we are committed to serving those who served, right? We actually waived the lender fee, $1,640, and we actually have loan options for credit scores of 580 and up for veterans. We've also partnered with Wounded Warrior Project with the goal of making a meaningful impact on mental health. We raised $1.8 million a year ago to support their health programs. Just last month, we raised more than $1 million to support 9 different military nonprofits who support veterans. I don't want that to come across as a commercial, but I'm going to tell you, we're very proud of the support that we have for veterans and their families. And I always ask a buyer if they've served in the military, right? And if they say yes, the first thing I do is I thank them for their service, and then I ask them if they've ever used their VA benefits. And I'm going to tell you, most veterans don't understand the benefits, and it's our job, you and I, to make sure that they take full advantage of what they have coming. All right, USDA loans. If you have a buyer that wants to go to a designated rural or suburban area, USDA loans are similar to FHA loans, but they're government backed, and they offer a borrower an ability to finance up to 100% of the mortgage, right? That means 0% down payment, and total household income cannot be higher than 115% of the median income in the area. So you can't take some billionaire and have them go use a USDA program to buy a small farmhouse, right? Not going to work. But USDA loans for people that want to move into rural areas, man, they're awesome. They're really, really cool. Talk to your lending partner about the eligibility for those. All right, jumbo loans. Obviously, those are for properties priced higher than the conventional loan limits. Remember, the higher the price, the more difficult the qualifications will be. And of course, depending on down payments, which could be significantly higher, mortgage payments can also be substantially higher, right? Renovation loans, don't cross those off the list for a purchase for a first-time home buyer. Think about this. Maybe you have a fixer-upper you're trying to sell, right? If it needs work, the buyers can actually negotiate that price and then use the renovation loan funds to make it their own. It's like buying a new house for them, right? So it's a really cool loan program. And there are a lot of other federally sponsored loans and grants designed to assist low to moderate income earners. We have programs for Native Americans. We have programs for homeowners that want to do energy efficient renovations. I mean, there's a ton of stuff out there. All right, now speaking of down payments, this is big. There are a number of state and local government programs available. And a lot of these programs for first-time home buyers, they help with closing costs, they can help with down payment, they can help with renovations, right? While not all of the programs are specifically geared toward first-time home buyers, they are a great option. And in some larger communities, like here in Chicago, there are city or county first-time homebuyer programs as well. I live in a western suburb of Chicago, and I went on to look for a first-time homebuyer program in my area, right there in my own community. I had no idea there's a first-time homebuyer program, right? There are programs offered by Fannie and Freddie for conventional first-time homebuyers. Let's look at those. My favorite is a program called One Down, okay? This is only offered by the guaranteed rate companies. It's our own program. We came up with it, and it's really cool. With this program, 1% of the down payment has to come from the buyer, 1%. And by the way, they can still use a gift if they need it, right? So 1% for $200,000 home, down payment would be $2,000, right? We give the buyer $2,000 or 2% of the purchase price, whichever's lower, in the form of a grant, which doesn't need to be paid back, right, to help with their down payment. Now, in order to be eligible, your income cannot be higher than 80% of what's called the AMI, which stands for Area Median Income. And you can Google that. You can see the charts out there for AMI, depending on where you are. Here in Chicago, AMI is $105,700. So at 80%, a household could make up to $85,000 and still take advantage of One Down, right? Buyers with income 50% or lower of their AMI can actually receive up to a $2,500 grant. Now, there are some restrictions. It has to be a single unit and it can only be their primary residence, right? But as I mentioned earlier, you can use a gift. PMI is actually lower. One Down can be used anywhere in the US and is based on the AMI of that property location. And the guaranteed rate companies will also give a $1,000 closing cost credit to use toward lender fees when the buyer finances a home purchase with One Down, right? So if you have questions about that program, check with your GR company lending partner. Now, a similar program to One Down is First Home Plus. And I like this program because it goes the other way with AMI, right? This program eliminates some loan terms and upfront fees for households that are at or below 100% area median income. That's that AMI again, right? Up to 120% in high cost areas. For instance, Chicago, high cost area, AMI is $105,700. So a household could make up to $126,840 and still qualify for the program, right? So there's a lot of young executives out there, right? There's a lot of people working at these big companies that make great money that are still living at home with mom and dad. Let's get them in a house, right? That means some first-time home buyers could qualify for premium pricing as much as 2% lower with this program than they would otherwise, right? Depending on their qualifications. So I think this is a really cool opportunity. Another program from Fannie Freddie is called Home Ready First. Program provides up to $8,000 in closing costs. It also provides some down payment assistance, right? Buyer can combo this with a temporary buy down option. That gives them a bigger foot in the door, right? It's not available everywhere. And again, your lending partner can determine if your buyers are eligible. All right, let's talk about DPA or down payment assistant grants. Those are designed to help first-time home buyers obtain assistance with their down payments. By the way, there are more than 2,000 DPA programs available, right? County, state, municipalities, all kinds of nonprofits, different kinds of DPAs available. This one requires a lot of homework, right? So what we have to do is we have to go out there and we have to search what they're available. And again, here at the Guaranteed Rate Companies, we have a department that handles our DPAs, and we just call them and say, here's what I got, and they kind of help us and point us in the right direction. Also on that same line is something called an MCC, which stands for a Mortgage Credit Certificate. Basically what that is a tax credit available to first-time home buyers. And in some cases, they can actually keep getting that tax credit for the life of the loan. That could be a substantial savings for buyers, right? So that's something you can look into. Not for profit sector, that's hard to say. There's some stuff that they offered as well. So in other words, what I'm telling you is there's tons of stuff out there, right? There's tons of programs, grants, loans, first-time home buyers. And it doesn't, some of them are regardless of income or credit score. So if we do some exploration, we could really yield some significant savings. The programs available to borrowers on the federal, state, and local level can also provide an incentive to get into home ownership. But again, you have to know about them. So make sure to have your buyers talk with your lending partner about all of these options available. And again, there's so many options for first-time home buyers. All right, now let's get into the transaction. And I'm trying to hurry because I don't want to keep you all day, but I got a lot to share. And I know I talk really fast. And again, we're gonna give you an opportunity to ask some questions toward the end. All right, so now that we've developed a strategy for them to purchase this home, we have to make sure it all goes as planned, right? They have a foundation. Now they got to use your expertise to look for the right house. This is important, right? They want to find the right house in the right place, meeting all their needs. You know they're going to shop online, right? And then they're going to want to see that house for real. What we don't want is them to continue to get their information from the internet, right? We want them to use you. We want them to use your expertise. We want them to make sure that you're actually walking them through every step of the way. The less they're on their own, the better we're all going to be, right? And think about limited inventory in some areas right now. Rising prices, not going to be easy, right? We got to be there to alleviate any frustration. We got to make it very clear to these borrowers, right? Because they're really excited. These buyers want to go out and they just want to go gung-ho, right? And they've seen these homes online. And we know sometimes those homes online have long been sold, right? It may take them a while to find a house, right? There's some stats out that are saying that anywhere from 6 to 9 months to find a house, right? Sometimes it doesn't take that long, but it could. We have to be able to be there to alleviate any frustration that they might have, right? Very important. All right, here's the process. So I take care of the application as your lending partner. I've developed a strategy and I've got them pre-approved. Now we're going to go do the home shopping thing, right? We as your lending partner, I'm going to stay in touch with them to see how they're doing. And I want to see how their search is going, right? I'm going to see what they are and what they're not finding. We may need to adjust their strategy, right? We may need to go up a little bit if we can on the price of home that they're looking for, right? You're obviously facilitating that search. This is critical. I would make this a rule. They don't look into anything without you, right? Because you're going to be the one that nurtures them all the way through. You're going to be available to answer questions. But I think you should set some parameters too. You know, think about these millennials, right? They may be up at 2 o'clock in the morning, they find a house and they want to call you and set up a showing, right? Not going to happen, right? You call me up until this hour of the day, or don't call me before this hour of the day. Set some parameters, but again, we want to be there to answer their questions. All right, now the 5 steps to a perfect transaction. Very important parts here, right? While you're facilitating the search, I'm going to be working with them to get them ready, right? So I want to take a few moments to walk you through what we're doing on our side so you can also help them understand the process. And as I mentioned, if your buyer is using one of the guaranteed rate companies, our AI system is very intuitive and it will only require the buyers to upload the documents we actually need. Usually it's the documents you see on your screen, but depending on the loan program and the other factors, it could be more, such as a credit or large deposit explanation, a gift letter. Our lending team is going to explain the process and how the documents are used. One point of note, there's a big difference between a pre-qualification, and a pre-approval, okay? A pre-qual is based on information that they provide us, right? Nothing's verified. A pre-approval is based on verified information. There's a big difference. So make sure you know what you have, okay? All right, this is a big one, and I'm going to spend a little bit of time here because I think this is probably one of the most important parts of this. Once I get them pre-approved, right? If I could lock them in a closet, take away their phone and their tablet and their laptop, and then I can hold the key to the door lock in my hand while we're processing the loan, that would be perfect. But obviously we can't do that. So I have to tell them, don't do anything. Don't do anything that could change your credit or financial circumstance. Don't do anything until we get your loan closed. So you, and the reason I'm telling you this, you can help us with that by reinforcing it with our buyers, right? Now, they should continue to pay their existing bills, right? If it takes them more than a month to find a house, pay their rent, right? If they, we want to make sure that they're using their credit cards. All right. No big purchases though. Gas, food, eating out, that's okay. But I tell them, don't go crazy, right? Don't run up your credit card. And actually, I tell them, look, if you have a question about what you can or can't do, call me. I'll tell you, right? What we don't want them to do is change their financial picture. No new credit accounts. Here's a quick story. I had a client under contract a few years ago, and I gave them my normal spiel about all these things, right? I said, don't do anything. Well, they decided to go to a furniture store just to get some ideas. And I said, remember, no large purchases, no large credit, no new credit lines, right? Well, that really cool salesperson, that furniture guy, right? Even though they were just getting some ideas, he convinced them that since it would be weeks for the furniture to actually arrive, they should go ahead and order it now. And he told them they wouldn't have to pay until after their mortgage was already closed. What he didn't tell them is that was 6 months, same as cash, right? You see where I'm going? They didn't know that's considered a new credit line, and it's actually a major purchase. We were already tight on cash, and we were really tight on ratios. Those furniture ideas actually blew up the deal. We didn't have enough money now to close, right? Because I now have to take that entire furniture purchase amount out of their cash to close. I have to look at what it did to their credit score, which it lowered them, right? It changed their ratios. And when we reran it through automated underwriting, it came back as what is called a refer, which is, might as well just say no deal, right? Oh my gosh, it took me a couple of weeks to get it all undone. We eventually closed, right? Could you imagine that happening in today's market? The deal would have fallen apart. And the sad part is they would have lost their earnest money, right? So we have to drive it home. If you don't know, ask me, right? No new credit. Don't consolidate any accounts. Don't close any accounts. Don't think you're helping me by paying off those collections or charge-offs. We've already dealt with them. Leave them alone. Don't move anything. No big withdrawals. No big deposits. I actually had a client that while they were out looking for a home, they got pre-approved, and then they actually got married, right? They didn't tell me about the wedding gifts of cash that they were going to deposit in their account. My gosh, I wish I'd have known about that money up front, by the way. And then I had another one who actually took the gift from grandma and put it in their account. Didn't follow the gift letter process, right? So we just have to, again, we have to hold their hand through the process. Other things not to do. Please don't change jobs unless, of course, you're starting another one right away and it pays the same, right, or more. Keep money in your account. Don't have anybody help you with anything. No money, right? All cash has to be sourced. And of course, did I mention no new lines of credit? Don't go co-sign a loan for somebody else, right? That's a new line of credit. So again, we have to let them know, just live your life normally. Don't do anything else. Okay, and help us with that. All right, I know that was a long one. Now that we know what your buyers can afford, you're going to facilitate the home search. And I keep driving that home, right? Do your normal interview with them about what they want, but you got to go deeper, right? I always use the question of what's important to you about your dream home, right? What matters most to you when buying a house? You consider, things like location. Where do they work? They're not going to, commute for 4 hours to go to work, right? Talk about school district, size of the yard. Do they want a chef's kitchen, right? Your buyer should go into their house search with a clear idea of what they absolutely need in a new house versus what they would like to have, right? Ask them what their deal breakers are. You want to make sure that you're on the same page with them. Remind them that the two aspects of their new home will have the biggest impact on their life. Number one, neighborhood, right? Number two, the type of dwelling they'll live in. If they have kids, add schools to that. Same thing if they're thinking about kids down the road. Ask them about their lifestyle. If they're foodies and they buy a house miles from any restaurants, they're not going to be happy, right? They're probably not going to buy that home on the USDA loan, right? Look at crime reports, gauge the safety of where they want to buy, right? The other thing you have to think about, single family home. Do they want a condo? Do they want a townhome? Single family, they want a ranch, a bungalow, right? take them to open houses. And the reason that you want to do that is they'll start to get some ideas, right? They'll start to see houses for real, not the stuff that they're seeing online. Again, facilitate the search, keep them on track. Again, make a rule with them. They don't go look at a house without you, okay? You're going to be able to control that. And remember, if you find something outside of what they're already pre-approved for, let us know so we can rerun those numbers. Now, when you go under contract, as I said earlier, get your lending partner involved as soon as you know so we can get started completing our side. Send us the executed contract right away. We're going to need the details of the earnest money for sure, right? We're going to work with the buyers to update any required documents, especially if there's been some time between the initial pre-approval and the contract. Remember, in many cases, we're getting approvals in one day. They may not be ready to move in a day, but we want to make sure that we're ready when they're ready to move. You do your home inspection as required. We'll work on the mortgage related stuff like appraisal, title, tax transcripts, all that good stuff. Because the faster we go, the more prepared we are, the less room there is for any error. Now, I talked earlier about a conditional approval. And what that simply means is the underwriter says, I'm good with this, but I'm going to need some updated information for final approval. Most common thing we see is updated paycheck stubs, updated bank statements, things like that, right? And this happens on every mortgage. I've never seen a loan come out of underwriting that is just approved, right? It's always conditionally approved. So our team is going to work with the buyers to get that underwriter, what the underwriter is requesting. But again, you can help us drive this. Make sure you encourage the buyers to follow our instructions and to get us what we need within 24 hours or less. Yes, 24 hours or less. We're going to call them up, say, I need this, get it to me, right? Again, I'd rather clear to close, get a clear to close several days in advance than have to chase all the items all the way to the closing date, right? And also, as I mentioned earlier, no two buyers are the same. The things that we need to get the loan approved will be different for each and every person on that loan. All right, yay, we're here, okay? As soon as we get that clear to close, our team's gonna send out the final closing disclosure. Now, if we've all done our job, no surprises. I've seen many instances with first-time home buyers where everything wasn't explained in detail, and when they get the CD, that closing disclosure, right, the money they were expecting to bring to closing is different. So remember that young couple I told you about where they wanted to be treated like school kids and taught every little detail? Here's one of the other things that they ran into. When they received their CD, they were never told things like transfer taxes, title fees, escrows. She told me that when they got the CD, they felt like they needed a complete another down payment. They were totally unprepared. And to be honest, the deal nearly fell apart. So make sure your lending partner explains the closing costs, not when they get the CD, but all the way back at the beginning of the mortgage process when they get what's called a loan estimate, right? Explain it then. Then when it gets to the CD and there's a big difference, we may be in trouble. So me as your lending partner, I need to go through that loan estimate with them. And then when they get that closing disclosure, there's going to be some tweaks and some changes. I need to go through that with them, right? But I don't want it to be a big difference. I have to be proactive. Now, you can help us with this as well when you prepare them for the contract and the negotiation. We'll confirm the closing date. Many of our closings are now done virtually, right? So check with your lending partner, not only the date and time that it'll be facilitated. If you're in an attorney state, explain that to them as well. Introduce them to the attorney so they get a feel. Also explain to your buyers exactly what will happen at the closing, when they can move in, and then prior to the closing, right? So when we get that clear to close, we know there's going to be a few days before we actually close, right? So what you need to do is you need to take some time and explain the little things. And this is important. Utilities, right? Updating their mailing address, with their banks and their other providers. How to do a change of address, right? On their new property, do they want to change the locks, right? Things that they will need to fix before they move in. How are they going to get their stuff there? Hopefully you have a mover that you like to refer and that you've referred that mover to them. These little things, they can make a huge difference in their experience. So prepare the buyer for the sale, right? Prepare them for the actual move in. And so they're ready. We'll talk about them again, how they get their funds to us at closing. You can help us with that too, right? So you and your lending partner, we got to work together, right? If we do that, the closing is going to go well. Our ultimate goal is to have some really happy people, right? And if we do all this stuff, we both get paid on time, right? Before I leave the closing, a couple more things. Closing gifts are really effective. Personally, on every purchase transaction, I used to show up at their new home a day or two after we closed. I just show up with some pizza and soft drinks. And if I knew them really well, maybe some hard drinks, right? But there are a lot of ways to thank them. And you can do some inexpensive gifts. Those things will have a big impact. Secondly, make sure you stay in touch with them. And I'm not talking about just your standard drip campaign, right? Check in on them, see how they're doing. Remember, every time you come in contact with them, it's an opportunity to ask for a referral. Okay, as we've discussed throughout our time together today, buying a home for the first time, it's so exciting. It's life-changing for these buyers. I get excited for them, right? But just remember this, that transaction, probably the biggest financial decision of their life. Now, through your Agent Advantage partnership, you and your GR company lending partner can offer this book. It's really cool. It's called The Ultimate Guide to Buying Your First Home. And I mean, it goes through everything. It breaks down every step. It helps them do the things they need to do to complete the step. And it's going to help you help them buy their first home, right? So it's really cool. Just ask your GR company lending partner about that. Now, finally, go deep with your clients, especially first-time homebuyers, right? They're going to ask a lot of questions. You should ask them a lot of questions too, because what you're doing is you're developing a relationship with them. And what you're ultimately doing is becoming their trusted advisor, which means they're going to come back to you. They're going to come back to you if they have any question about real estate, right? If you provide a great experience, you're going to have them for life, right? And even better, they're going to tell all their friends, right? We're always looking for referrals. That's a great way to get one. Don't be afraid to ask them to tell their friends either, right? Remember, you won't get a referral if you don't ask for one. Help them through their first, and I'm guarantee you, you're going to be around to help them again and again and again. All right, Kurt, I know that's a lot, and I talk really fast in a very short amount of time, so let's open it up for any questions that you might have.
Yeah, there's a couple specific ones in the chat, but I was thinking as you gave your presentation and you wrapped it up at the very end, if I'm a real estate agent watching this and in today's world of technology, which is awesome and important, but each step you gave is such an opportunity to build that relationship and get answers about their specific situation and get to know them and make them aware of everything and be the expert. But trust was the key word. You said it right at the end. That home buyer guide is a must. You can't really assume anything. A specific question, we can, FHA credit score of 580, is it 3.5% down? I know we can follow up with some of these people after, but that
Yeah,
was the
again,
question.
every borrower is different, and until I actually pull their credit and run the information, but we do have a 3.5% down program for some buyers with a 580, right? You get much lower than that, they're going to have a higher down payment. But again, I can't really be specific on a particular buyer because
guarantee rate, family of company loan officer.
Yeah, you got to go to your lending partner at the GR company and actually, until we actually pull that credit and run them through our system, we're not going to know exactly what we can do there. But we do have some programs that will go down to a 580 with a 3.5% down.
Yeah, very good. Good question. Are a lot of loans you talked about available in all states? Are there any exceptions?
Most all of the loan programs that I talked about are available in all states. However, down payment assistance programs vary by city, county, state, right? Some municipalities, some rural areas. They're all zip code driven. So we have to, we actually have to find out what the zip code is of the subject property, and then we have to see exactly what would be available for that particular area. The OneDrive program we have, it's available nationwide, right? First Home Plus, available nationwide. More specific when we come into down payment assistance, MCCs, depending on the zip code of the property. So again, we would have to figure out where the subject property is going to be, and then we would have to figure out what would be available that way for it.
Yeah, very good. Some other specifics, again, contact your Guaranteed Family Company's loan officer for specifics or for help with your first-time home buyer. Lots asking if this presentation and Dave's slides will be available. This entire recording will be sent out to anyone who registered and also archived on Agent Advantage. So go to the Agent Advantage site. Without a login, you can go to the coaching piece and see this and all of our past webinars. But great stuff, Dave. Thanks again for a info-packed presentation, and we appreciate your time.
Absolutely. I love doing this stuff. I mean, and the more people that we help, obtain that dream of home ownership, the more we're doing our job, right? That's what we do, is we facilitate the dream, and I love doing that.
Yep, very good. Okay, thanks to all attended for spending this hour with us. We appreciate you being here. Hope you join the next one. Thank you, Dave, and have a great rest of your day, everybody.